Hi, if you're an agent out there, like most agents that I speak to on a daily basis, and want to grow your daytime activity and increase your average premium size, it's really about getting in front of, in my opinion, business owners. And today on Selling Life and Annuities, we're going to talk about funding a retirement buy-sell agreement for business owners. Stay tuned. Hey everybody, today I've got with me Ray Parman, one of our top life marketers here at Gord Marketing, and we're going to talk about working with business owners and accomplishing two key objectives for them. First and foremost is helping them fund a comfortable retirement, and the second one is facilitating a buy-sell agreement, perhaps an exit strategy. Mm-hmm. So Ray, talk to us a little bit about the concept and what we're trying to do here.
So oftentimes one of the basic first things that you got to do as a business owner is establish a buy-sell agreement and then fund it. And as many people do, they usually utilize term insurance, right? It's affordable, it's manageable, and it's just a great way to protect that specific risk. But oftentimes, business owners, that business is one of, if not their only asset out there. And so oftentimes the conversation then needs to turn to how can I one day exit my business and still receive a retirement income.
Yeah, absolutely. It's interesting you mentioned the business as an asset. I know when I was a personal producer out calling on businesses and we would talk about term insurance for some of their business needs, term insurance is really just a commodity, right? You're just simply buying death benefit. But just like their business is an asset, the life insurance policy or a life insurance policy can be an asset, as long as it builds cash value. So whether that's IUL or whole life or any accumulation type life insurance policy, we can utilize it for both purposes, mm-hmm. right?
Yeah, correct. So what you can do with this strategy where we're funding a retirement buy-sell is positioning an IUL, it could be whole life as well, any cash value life insurance policy that would provide a death benefit, but also that growing cash value that would help a business owner at some point have the funds to be able to exit the business, enable them to fund a buyout if somebody retires or quits the business,
sure.
Or becomes disabled for that matter too. Those are the key elements to implementing that strategy.
So, we've got the policy, right? Mm-hmm. We pay premiums, we've got a funding vehicle and a tool that's executed upon a business owner's death or disability. But we also have an agreement, right? Mm-hmm. Probably the most key portion of this type of scenario is the buy-sell agreement. Now, can an advisor out there, can we as an IMO or can the insurance company draw up that agreement?
We cannot. They would need to consult with their attorney. We certainly have templates and resources that could help perpetuate that conversation, and we're more than happy to share that with them. But yeah, that's got to fall on the shoulders of an attorney.
All right, very good. Now, we do have specimen documents, right? We've got some sample language we could provide the business owner and or the attorney to help them in drafting a document, but we cannot draft that document. Correct. So what about other advantages? Any other advantages with regards to permanent insurance versus term?
Yeah, so the way this works is that each business owner would take the policy out on his or herself. Okay. They would be the insured. They would own the policy, but what they do is endorse the death benefit to their other co-owners, so that if the worst happened and they did pass away, that death benefit would go to them, so they could buy out the deceased owner's death benefit or share of the business, I should say.
Sure.
But ultimately, where this helps is the cash value, again, which helps them retire out of the business. And by the way, a lot of IUL carriers have a long-term care rider that can be added to the policy as well to help out for any long-term care events that they may come up against too in their older years.
Yeah. And what you just described there is the prototypical cross-purchase scenario, right? Business owner A, business owner B, cross-purchase scenario. And one often unaddressed or forgotten benefit of that scenario is the step-up in basis, right? Mm-hmm. I mean, when a business owner passes, the surviving business owner receives that cash. They purchase that business interest from the deceased partner's spouse, and they get a tax advantage through a step-up in basis.
Correct.
But perhaps for advisors, agents watching this video, one of the biggest advantages they might experience from looking at permanent insurance and the opportunities there versus term might be what?
Enhanced commissions,
There you go.
building your practice. Absolutely.
And better renewals. It's truly, in looking at permanent insurance for retirement planning and buy-sell, it's a win-win scenario for everybody.
It sure can be.
It's a better product, a better solution for the business owner. It's certainly better for the advisor in building their practice. But Ray, listen, with that, we have to call this episode of Selling Life and Annuities to an end. We've reached our time limit. But I would like to ask you, if you're watching this video, to click subscribe and the notification bell. Every Tuesday, we come out with new content, and we want to make sure that you're notified so you can watch and learn. But with that, we're going to call this episode to an end. Happy selling out there, and thank you for watching.